And Ross, another big story today was Commonwealth Bank. They've just held a strategy day, and part of that was the announcement they're launching a new digital home loan called Unloan. I sat down with CEO Matt Comyn at the bank's offices in Sydney, and I started by asking why CBA would release a new home loan product when there were already so many others out there in the market.
Yeah, it was part of a broader update today on some of the things that we're doing to reimagine banking. You're right, we announced Unloan, which is a new digital direct home loan for customers who want to deal digitally themselves. It's for an owner-occupier, sub 80% loan-to-value ratio. The rate itself we announced today was 2.14%, so we think it's a simple process. You can get an application through in 10 minutes, a sharp rate, and also an Australian first where we've got a ever-reducing interest rate. So that 2.14% goes down by 0.01 each year, up until a maximum of loan term, which is 30 years.
So is this a product for someone that already owns a home and really wants to refinance at a lower rate? Is that who it's really aimed at?
Yeah, from today it's available for refinance. Over time we're going to add it for people who are taking out a new home loan. But we do tend to see that people who are new to the market, understandably, it's a really important decision, want to be guided by one of our lenders. And this is probably for people who are more confident, more experienced in the market, looking to take out or to see a refinance opportunity. And so it's a reasonably small category overall in the market, but we do think it's going to play an important role going forward.
Yeah, how big do you think that loan size could grow with the Unloan book comparative to the rest of your home loans?
Yeah, it's really hard to say. I mean, that sort of category of digital only is very small. It'd be less than 5% of the overall market at the moment. And, I think inevitably, certainly over the medium and long term, it's going to play a more important role. We see that, through all walks of life, people who are particularly younger customers, coming through much more confident to spend and interact with, people and businesses directly, digitally, and predominantly through their mobile phone.
You said last week there are some banks issuing home loans below the cost of capital. Are you concerned about credit quality at the moment with some of those lenders?
Yeah, well, there's a couple of different factors. One's pricing, and obviously one's around, risk appetite. And it's obviously up for financial institutions themselves to worry about that. Of course, we, as the largest lender, want to make sure we're lending responsibly. We see that the housing market will soften and moderate, which I think overall is not a bad thing given how much prices have risen. But of course, on the other side of that, it's a very competitive market, has been for a long time. There's different people come in and out of the market with different offers. Obviously, we're almost a quarter of the loans written in Australia. We want to be consistent, delivering great competitive offers to our customers every day.
Both sides of politics have plans to stimulate the housing market, particularly for first home buyers. With property prices falling, is now really a good time for first home buyers to be getting into the property market? Well,
understandably, housing is such an important asset class, just given the totality of how much wealth is stored in it. But it also, for people, it's a really important determinant of overall wealth. There's a lot of stability that comes with owning your own home. So I think it's perfectly understandable. There's a lot of focus on policy to make affordability and for people to be able to access the housing market. We have seen house prices, as I said, go up very strongly in 2020, 2021 in particular. And so it's natural, I think, at this point in the cycle that housing affordability is becoming a bigger issue. First home buyers are typically around 10% of the market. Obviously it's been a tough time to enter the housing market. So I think there is, as you said, in this election run-up, some policies targeted specifically towards that. And I also think that will continue post the election.
Is the bank doing any modelling around the election result on who might potentially win so you're ready to go, or is it just business as usual right now?
It's business as usual. Of course, we're an interested observer and watching some of the policies. But ultimately what we look very closely at is the underlying strength of the economy, which of course has performed very well. We project that forward and try to think about, how do we best support both financial stability but also facilitate economic growth. And then we have to think through a range of sort of scenarios that look better than what we're expecting, and most importantly, a number of scenarios that look worse. And so we try to decouple it from the politics or the particular parties, but the overall policies, and going into the next budget will, of course, be important.
How confident are you feeling right now with the economy? Got rising inflation, falling house prices, rising wages. Do you think we're sleepwalking towards a recession in Australia?
I don't. I do think there's more risks than there was. If we think about our half-year results when we delivered them in February, we remain very confident about the medium-term prospects for the economy. It's clearly performing well. GDP will be up, quite strongly over the course of this year. Unemployment's, touching, 50-plus year lows. But inflation has been higher. Clearly, the cash rate's going up. There's a lot of debate, understandably, about not just the pace at which the cash rate goes up, but ultimately how much it goes up to. And we're forecasting a cash rate of about 1.6% by next year. I mean, the market's pricing in approximately double that. I think a cash rate that's north of 3% would be contractionary on the economy, and so I do think it's going to be interesting over the next few months and critical to see how does the economy respond to a higher cash rate environment, how does confidence, how do a range of different economic data respond to that. We'll certainly be watching that closely, and I think there's probably slightly more caution today than there was at the start of the year.
Today you've also launched a new kids banking program. I know you used to have Dolomites, but that was shut down after a bit of an ASIC review. How's the KIT program different?
Yeah, look, we're lucky to have been able to play, I think, an important role. We like to think so in financial literacy for more than 90 years. Many people still remember their Dolomite account very fondly. We see that regularly come through in customer feedback. We've tried to design a proposition for younger customers, clearly digitally. We've worked with consumer advocates, a number of experts in the space in and around financial literacy. We've tried to design a fun and safe way for people to learn about some essential lessons of money management, budgeting, saving, spending. There's an important role clearly for parents to play in that education process. So, I mean, it's early days. We'd love to think that KIT could play a role as meaningfully as Dolomites did over many decades.
Last time I was here, you launched your Buy Now, Pay Later product. You've also got a big investment in Klarna. How committed are you to that Klarna investment now? You see Buy Now, Pay Later companies' valuations fall so significantly over the last 12 months.
Yeah, look, we're very committed. I mean, we made that investment many years ago, obviously before a very substantial increase in prices. We have a joint economic interest in the Australia business with Klarna. I mean, we can see they're performing extremely well globally, notwithstanding, I think, the tech sector, of course, more broadly, valuations have been under pressure. But, I mean, no change in our posture. We want to continue to work with world-class partners, make sure we're bringing the most innovative experiences, in this case in payments, to our customers via our mobile banking app.
Matt Comyn, CEO of Commonwealth Bank, thanks so much for your time.
Absolute pleasure.